Hello to all traders and welcome back to another market review brought to you by Orbex. So we've been reporting on gold and oil in the last few weeks since the start of this conflict, and gold has kind of plateaued at the moment, not really showing many signs of a big jump or a deep correction. However, oil and gas are the main commodities that have really been pushing higher. Oil at the moment creeping up to $100 and doesn't look like it's going to slow down anytime soon, especially over a potential prolonged conflict that could head into the rest of the year, at least into the first half of the year, even though Donald Trump says into 4 to 6 weeks it should be over. Well, I think a lot of other countries and traders especially have other suggestions on that particular topic. So we're just looking at stocks today and indices after the S&P, NASDAQ and the Dow have crashed. Three negative sessions in a row now. The S&P moving towards November lows, and we're seeing the Dow on the chart at the moment hitting a nice double bottom, finding firm support at the moment, roughly around 400. But if we go back on the daily chart, this is what's more interesting, because you can see the massive decline since even before the conflict began. But when the conflict did begin, we've seen over 2,000 points being wiped off the Dow, and this is on fears of a prolonged war that's continuing, supply fears. We've got goods that could be trapped, not really circulating around the globe as we would normally have a free trade agreement with all of the countries. So this is what's really starting to take its grip on the Dow and on the other indices as well. Global indices, European indices falling, Japanese and Asian indices falling as well. So we're just waiting to see if price action is going to continue moving lower. Like I said, we haven't seen these prices since November, when we had this meteoric rise and a very good start to the year. Actually, as you can see here, at the beginning of February, we had such a spike in price action. The AI and technology boom was continuing, and this was really pushing stocks quite higher. But now, as you can see, a massive role reversal that's happening, and we're really falling away from the 48,000 psychological level. We're actually falling away from 47,000 actually. So we're just waiting to see if price action is going to have a little bit of a pickup, especially with the RSI and other stochastics in the really oversold zone. It is expected to have a bit of a brief tick up, but how much higher can it go, and will it go any higher than what it is doing now? As I said, we're really very firmly pressured under 47,000. That's the next target at the moment for us. I mean, we're just 46,800 approximately is what we're kind of trading at the moment at the time of this video. So as I said, another few hundred points higher isn't really out of the realm of possibility, but it is sinking very, very vast, and hitting off this 48,000 double top here, where it got rejected and then rejected one more time. Bit of a false spike here, but so price action is looking to go a little bit lower. Let's just quickly take you on the S&P, because that's had a few days to forget. As I said, these red candlesticks not doing any favors with 1, 2 and a very, very bearish candlestick at the moment on today's trading, opening with a gap in the market, and price action really started. Well, the market hasn't actually opened yet, but when it does, we are expected to have another fall lower. And if we do break this particular spike of just about 6,600, then we could have a complete devastation on the S&P as well. Like I said, with the Dow, going back on the daily chart, was hitting November lows at the moment, but it could actually go even further to last summer. And as I said, if this conflict continues into this year, and not the 4 to 6 weeks period, which is a lot of traders and economists are saying it's not going to happen, then we could see more of a sell-off in price action as well. But as always, we'll bring you all the latest in fundamentals and technicals as they come. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.